Hello guys, welcome to the Trading Parrot. HyperLiquid has rallied in just 3 weeks 100% from the lows of $10 into the next resistance of $20 and at the moment facing global resistance. There is a confluence right there at $20. In today's video we're going to talk about what could be the additional upside if we manage to break and reclaim the $20 resistance, or if we get a rejection from there, what constitutes a healthy retest, an area that we could buy. For that, we're going to look into liquidation pools, a little bit of news, and even some TA from alternative, less reputable TA analysts out there. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And even though you might not be interested in the coin HyperLiquid, you can always write down in the comments down below what coin would you like me to do an in-depth analysis similar to this video as well. So let's start with the basics. Weekly time frame on HyperLiquid. I'm using the chart listed on KuCoin, but you can trade HyperLiquid in multiple exchanges, starting with Bybit, 2Bit, OKX, Bluffin. There are links for those 4 exchanges in the description. Those are the ones that I currently use. If you go for the Bluffin, you get a 10% cashback automatically with any deposit. And if you go with the option of Bybit from the link down in the description, you can get a position airdrop of $500 as well. So guess what? Hype is doing pretty much what Bitcoin is doing on the weekly time frame. 11th of January, it was testing that 20 level as support. Around end of February, it lost it and it started a downtrend that ended up roughly around $9.3. Since then, it has managed to reclaim $17, which was resistance on the 25th of March, and now is testing it as new support. So all this formation right below $20 is starting to look pretty bullish in my opinion. It's not the perfect head and shoulders, neither is the perfect inverse cap and handle, actually cap and handle, but you can see the bullishness in here. I guess the challenge is to break beyond this $20 at the moment. And not just because it's the horizontal next level of resistance, but also at $20 is where we are going to meet with the downwards sloping trend line that meets perfectly with that level there, not just in terms of the level, but also in terms of timing. If we were to break those $20 and we measure the high of this whole weird bullish formation in here, that gives us a target towards $30, which doesn't really surprise me, although we have to admit that we have before that a level of strong resistance at $27. You can see how many times in this area before we turn into bearish, we struggled from 30th of January up until 18th of February trying to break that resistance and we couldn't. So if we are getting closer to $27, if we get that lucky that the breakout actually is confirmed beyond the neckline, then I wouldn't just blindly wait for $30. If we get to 27, that is going to be a tough resistance. Before we look into resistance in between, and before we cover areas that are pretty sexy buys for HyperLiquid, let's have a look at a few other aspects. This is currently a $6 billion market cap with a fully diluted valuation of 18, almost 19 billion. The last 24 hours, there's been a volume traded of 30 million. So it's a pretty small beast that can make big moves. I guess that's the takeaway. And at the moment, at the ranking 26. Some news are admitting that Hype is struggling to break the $20 resistance. That is equivalent to the 95K. But if Bitcoin manages to conquer the 95K, it's going to be pretty easy for Hype to continue going higher. And I promise you, I'm just opening this article and I'm seeing a little bit of confluence on the points I found. The only difference is that this particular analyst is placing the resistance trend line on the highs of the price, not on the close, which you know is not necessarily my preference. There's not a right and wrong, it's just a matter of I prefer placing things on closing basis. Just because those wicks tend to be fake outs most of the time. Lunar Crash says HyperLiquid's native token Hype has seen significant activity and attention on social media, with many users expressing bullish sentiments and discussing its potential. The token has also seen large trades and accumulation, with one user reporting to turn 0 into 1,170 Hype. Additionally, HyperLiquid ecosystem is seeing developments, including the unlocking of coin margin and potential new utilities for stakers. I have a quick look at the news, and most of them are just mentioning the 20 resistance, the uptrend, the reverse, the trading volume increasing. There's an upcoming fee discount system and account linking feature. And let's take a minute to find the liquidation levels, particularly the ones that are very close to the price. I'm interested in this balance between the pools right above the price and below the price. We can see in here a sneaky level of $16 that is getting very heavy. Not as heavy as before, but relative to what we have right above the price and below, that is kind of the heaviest at the moment, with around 128K in liquidation leverage. And when it comes to the liquidation map, although we do have some decent liquidations at $19.27, which is slightly above how high the price managed to get, still that $16.79 is the largest at the moment, followed by $16.47. So around the $16 is where we could say we have currently the risk of a low-hanging fruit liquidation level. Let's look at the RSI as well, because we still don't see on the price the global breakout beyond the $20, but let's sneak peek into what the RSI has to say. And you can see that the RSI has managed already to break out. Notice that initially there was a fake out here, right? That was a breakout that managed to get into 51 RSI weekly, and after that it put a higher low with a bullish divergence. And thanks to that, we have to move the line in here, and we get a breakout that so far has succeeded to get to the highs of 67. We have now identified a channel to the upside, and that means two things: that we can now start making use of new potential higher highs for the RSI located at around 71, 72. It depends on how fast we move. I would say, realistically speaking, 72. And to the downside, in terms of global support, let's correct this, that should be roughly around 45. So we got 45 on the lower end, and on the upper end, 72. So I have placed those numbers, 72 and 45, in the chart. And let's zoom in this section in here. So we could say that initially we have a resistance at 22. That is where I would like the price to stop and to retest the breakout beyond $20. We do not want to get to $22 and then lose $20 and come back into 17 or even lower. That could turn all that move up into a fake out. So the ideal scenario at the moment is if we test maybe once more that 16, slightly lower, to produce a liquidity hand there and grab energy to go into 22. That is something that is doable at the moment. You can see that the support on the lower trend line on the RSI is coming up. It's a moving target. At the moment it's at 15.5. But if we took a couple of weeks to go lower, we could meet up with that slightly at $16. And if we can do that, we can reach that 15.9, 16 point something that we were seeing in the past 30 days. In this chart, we are looking at 3 months. That's why we can see 15.9, but we cannot see it in this chart that only shows 30 days. But definitely 15.9 is way heavier than just 16 point something. And the main reason is because just recently we've been bouncing from that level. This week, and that week contribute to having heavier liquidity slightly below 16. If we place a Fibonacci extension from the lows into the new highs around 19.5, if the lows were actually 17, the one extension gets us into $27 and the Watt 618 into $33. But assuming that we go slightly lower into 16 or 15 point something to liquidate those levels, then the 1618 starts to align a little bit better with the $30 target, and the 0618 with the $22 as well. Something I got wrong is that we are doing this analysis on the daily time frame. The main reason is because there's very little history in the chart. The analysis on the weekly is not that different. We still have that $19, $20 resistance, as you can see in here. The problem is on the weekly, the RSI becomes really difficult to analyze because there's not enough history. So we have to drop it to the daily and do a slightly weaker analysis in here. Notice as well that since we lost the support of the $20, the point of control is precisely at $15.9. Another confluence that could be attracting that price into that liquidation level as well. So in a nutshell, I will say right against the $20 resistance is not a great idea for me to enter on hype, but as we start going into $16 and slightly below it, it could be a hot area to buy the dip. And from those lows, an initial upside of 34% into the conservative target of 22, and the full target of 82% against those $30, also showing some decent amount of confluence to the upside. Of course, do your own research and remember that the actual ultimate boss is the general markets, which at the moment is battling with that weekly neckline, just like Bitcoin is with 95K. Do not make the mistake of trading any of these coins without looking at the full context. Guys, thanks so much for watching and I'll see you in the next one. Take care. Bye bye.